Hello, everyone. My name is Shane Stiles. I'm the president of Gate 39 Media. We're a financial marketing and technology company with deep specialization in funds and alternative asset marketing. This show is Alts Engine, where we provide guidance and information on how to grow your alternative investment management business. Our guest today is Bryan Johnson, the president of Johnson and Company. And let me put the URL, let me enunciate the URL because it's johnsn.com. And we'll, of course, put it on the screen there for you. Bryan Johnson, Bryan and I have gone back years speaking at events, speaking at conferences where we've been together with both the buy side and the sell side, with the managers and the allocators in the space. And I got to know Bryan by watching him speak and present and really work with the managers to help them deliver their message, to tell them their stories, and help them build their business. But the one thing I want to say right off the bat is he doesn't do it without a process. And that is if anyone knows me, that's my thing. I love to talk about the process. I love to talk about the story, but it's really about the process just as much. So with that, Bryan, if you could give a brief intro on yourself and some of your experience.
Thanks, Shane. I appreciate that. Again, I'm Bryan Johnson, founder and managing partner of Johnson and Company. Started Johnson and Company almost 13 years ago now, on May of 2011. Prior to that, I have been in the investment alternative business almost 28 years. I started out as a banker, and then I was a portfolio manager for a family office in New York. And then that family put me in business. And then they were my first limited partner in my own fund. And then I grew that to 63 other limited partners in all family offices and individuals. And had about a 12-year run in a pretty successful fund of my own.
Amazing, amazing. I want to talk to you more about that process and how you work with managers because it's a lot of managers, right? Not just obviously some of that is in your practice and some of it is the managers that you've just interacted with and kind of mentored over time. Because I do think you take such a unique approach to how you really do mentor and you teach, right? It's the teach a man to fish adage is your
Right.
approach to
Yeah,
how you.
I have anybody who's around me for any length of time knows I have a lot of sayings. And one of the sayings that I say to managers is education before execution. So, you got to learn about the business. A lot of them don't know what they don't know. So being educated about the marketing process, being educated about the fundraising process, because, let's go back to how you started out, Shane, about process. You cannot have success without process, because when you don't have process, what generally happens is you have improvisational, inconsistent, ineffective behavior and actions, and you get suboptimal results. So I pound the table around process. So, and then again, the educational process around what's the difference between the marketing process and the fundraising process, because they're two different processes, but they're critically complementary to each other. And I, kind of that's part of that educational process that I just mentioned to managers.
Yep. And yes, the marketing and sales, right? Very distinct disciplines, and I think understanding understanding the process, and as I look at a couple of these statistics that you've compiled and shared from other sources out there, and I'm going to read them real quick. 89% of hedge funds never reach $100 million in AUM, right?
Correct.
And I think the old standard, and I think this is still kind of a benchmark, is like if you hit 50 million in AUM, you have enough to have a nice little business that will support you and maybe one or two employees, right?
Hmm.
Right. That 50 million is kind of that one benchmark. So almost 90% never reaching the 100 million AUM. Almost 50% of the hedge funds in the last 13, 14 years are closed, with the majority of them only having a lifespan of 3 years. That's
Right.
like that's like restaurant startup numbers,
Yeah,
right?
yeah. Well, small business failures are or startup hedge fund is a small business. And one of the things, when we go back to process, and you kind of know this probably much better than I do, when you talk about process, it has to be data driven. So I am a very big proponent about putting out independent, high integrity data to drive the process. So we want to operate from facts and data and not feelings, because when if you're operating from feelings, your emotions can take you to places that it probably shouldn't. So, but if you're executing on high integrity facts and data, then you're probably going to be better positioned to get to the destination, than you would operating on just pure feelings. So, I'm a big proponent of putting out a lot of data that's independent to point people to, so they're flying in the right direction, so to speak.
Yeah. And I think it's interesting because I feel like every manager knows that they need this because that's what they do, right? You're a manager, you rely on data to make your strategy run, right?
Hmm.
Yet, because sales and marketing in and of itself is a different animal, when it comes to to creating procedures and to creating process, right, for the way they trade and manage money, then they're not doing that in the sales process. So they don't have the data to make decisions and to guide them that this sales process is moving forward with these potential allocators and these are not, or I'm getting bites, or you know, coming up with that process and being able to review it as a whole.
Hmm. Yeah, I think when you talk about the hedge fund space, a lot of the people that the PMs, the portfolio managers, they're very removed from the sales and marketing processes. If they've come from another place, that was a department that they didn't really have much interaction with, so they didn't have much familiarity with it. So that's part of the educational process. Is somebody else was handling that for them or in that big organization. So they're like, they don't have much familiarity with it. They didn't have no experience or expertise, no skill. So what they were used to doing is kind of showing up and talking about the performance and why somebody else had laid the groundwork from a marketing standpoint and to enable them to do that. So they think again they've missed a whole big part of what really set them up to be able to talk about performance. So they now conflate performance or speaking, or what they call pitching, with marketing, and that's not marketing. So and also, and I have to say this, just pitching is a four-letter word in my firm. Nobody ever uses that word. Okay. And there's a number of reasons why, because pitching, in my opinion, just to define it, is manager focused, whereas we use the word or the phrase presenting, which is investor centric.
I want to break that marketing and sales up now. Right? We've talked a little bit about the difference of that, and continuing on that theme with the marketing. And I know this is part of your process when you work with a manager. And actually, I just gave a presentation on this. Like, what is your story? What
Right.
is the story that you have to tell? Right?
Mm-hmm.
When we do pitch books for clients and when we review pitch books, I'm sure you're saying, what is your story? What is making you unique? What is making you different? And why are you or your team the team to pull that off?
Mm-hmm.
How to, not just it's a X strategy and it's a lot like that ETF, but
Yeah.
that's not going to work, right?
Right. Right. Right.
What are the unique selling points and really stories that you can tell so that you come off and naturally and get interest, right? And help investors say, hey, I can use you to fill this hole in the portfolio that I'm looking to fill, right? Like that's what I need as part of the diversified portfolio I'm trying uh, to develop. So in telling that story, right? I think I'd like for you to give me your opinion on how you help tell that story. What are the important things around that? And then and then some of the other things that are aspects of marketing and not of sales.
Sure. So we talk about story, and there's not just one story, first of all. um, you know, there are really three narratives that you have to nail and understand. And the last narrative of the three, your story is the least important of the other two of the three. The first narrative that you have to understand is what is the story that that particular prospect is telling themselves about you. There's a story in every room before you get to that room. There's no blank slate. So you've got a website. You probably maybe have some thought leadership. You've set things out in the public domain, and now because we have technology, that stuff is easily accessible. So that investor is now developing a narrative about you before you even get to them. So that's the first narrative. The second level narrative is what's the story of their life? How are they? Because what you're asking them to do is include you as a manager in their expression of what they see, the how they see the world. So when we talk about things like now, inflation and taxes and war and crisis, and they say, well, how is that? How do they see those things, and how do they express their portfolio? What solutions are they looking for in order to deal with how they see the world? What's that narrative? And now you can construct your narrative to fit into their worldview of how they want to express it.
Yes, absolutely. Right. So I think that goes into that marketing process, right? It's
Mm-hmm.
you touched on a couple other things, is like, will someone know you before you walk into a room? Right?
Mm-hmm.
And what are the things that they've either read about you or understand, whether they got whether it's information that comes out of a platform, whether it's a newsletter that they've somehow received, or social media posts that they've come upon, or any other media or conferences appearances that you've made. Right? To me, those are all key functions of the marketing, and having all those other kind of ancillary pieces, not ancillary, but pieces in the world that build up your reputation. How important do you feel that that is? Because lots of managers like, I don't have time. I don't have time for thought leadership. I don't have time. Like, all they want to do is, to them, marketing is, oh, it's the end of the quarter or the end of the month, and I'm literally going to send an email with a PDF attachment of a tear sheet to my marketing list, and that's my marketing.
So let's go back to the numbers again. If you look in the hedge fund space, globally, there are 30,000 active hedge funds. Here in the United States, we comprise about 60% of the global number. It's about 18,000, and all of them in active fundraising. Okay, there are about $700 billion plus funds, and all of them are in active marketing, and they're doing it at a high level. It's hyper competitive. They've got intelligent, driven people doing it. So the marketing, and it's a crowded space. We're all going after the same dollar. So you don't have an investment competition. You have a marketing competition if you want to raise assets, and not only if you want to raise assets, if you want to retain assets. So your true competition is not an investment performance competition. Your true competition is a marketing competition in a crowded, hyper competitive, stringently demanding space. Now you can approach that competition in a marginal, perfunctory way, and you will get suboptimal results, because somebody's out marketing you. I'm a big believer in better relationships trump better performance. Okay, better relationships are much better because you can make exponential improvement in your relationship engagement that will have substantial payoff, not only in the acquisition of assets but the retention of assets. And in the retention, especially in volatile times, marketing is a retention mechanism, not just an acquisition mechanism. The more people, better people understand you, and they say, well, we can ride this volatility out. But if they don't understand you because you haven't done the appropriate level of marketing, and the assets will go out the door to somebody who's they do have more trust and conviction with. If you look at the allocation, what's happening now, allocation decisions. Why are investors sticking with funds that are underperforming, but they know they're doubling down on funds that are underperforming, but they have a relationship with them. They're not forming new relationships to funds that are outperforming the managers that they currently have. That's all a part of the marketing function. So when a manager says, I don't have time to do this, I'm saying, you can't afford not to make the time to do it. Because, if you think that performance is a AUM retention mechanism, think again. The data says otherwise. You've got lots of funds. The best performing funds are not the ones with the strongest inflows.
Agreed. And you mentioned, right, you said the competition are the 18,000 in the US alone, hedge
Mm-hmm.
funds out there. But now, ETFs, you can practically open one overnight. Well,
Exactly.
not really
Right.
because of compliance, but you
Well,
could
yeah,
technically,
yeah.
right?
It's easy. It's
Yeah,
easy.
yeah.
Yeah.
And SMAs are back, right? They're involved.
Exactly.
There's a ton of those, right?
Yep.
So, so your competition is not 18,000. It's 100,000 or I mean it's huge, right?
Yeah. I mean, it's growing every day. Like when I talk to managers about what the competitive landscape looks like, and I usually like look at three buckets of the competitive landscape. What I call qualitative competition. It means who's got a stronger relationship with the investor that you're trying to get. And then there's quantitative, competition. Who's outperforming you? Just like whose numbers are better than yours, and then get to the last one, which I call structural competition, which is what you just brought up, the ETFs, the replication strategies that are, with a higher focus on fees. Those are lower fees and they're liquid. So what's usually the knock on hedge funds? High fees and illiquidity. So if you can cobble together some ETFs to replicate a hedge fund strategy and it's cheaper and it's more liquid, that's your competition too. So from a marketing standpoint, if you're going to be in front of somebody, you got to know who your competition is. Why are you better than that replication strategy? Why are you better than the next person who may be quantitatively outperforming you, maybe on a marginal basis? And then how are you going to break that trust bond in a qualitatively competitive situation? And so understand, and that's all market, all those things across all three of those buckets, it's all about marketing, in my opinion.
So on the sales side, like every I think it's pretty standard what people consider, to be sales.
Mm-hmm.
But I still want to hear your version of, like, because everyone is like, oh, I make calls and I send emails and
Mm-hmm.
that. But obviously, I think the big thing around, we know what sales is, but I think the biggest problem is how to do sales.
Yeah,
And then the other part of that, I want to address as well, is, does prospecting fall under sales or marketing or both? Because that's
that's all great questions. So let's talk about, sales. And, from a sales perspective, what I advocate is a consultative approach to sales. Okay,
Hmm.
that's what it takes when you, particularly if you're dealing with, sophisticated investors, maybe a large family office, institutions. One of as I said at the top, I'm always talking about slogans and sayings. One of the slogans that I tell managers all the time is complexity demands collaboration. So when you get to that institution or that consultant or that family, you're going to have to be able to work with people around that table, and you're going to have to do that in a consultative way. So, and build trust around that table. That's part of the marketing process. So, working in a consultative sales process and building trust around that table, what I call 360-degree confidence, is critical. So, you can't go in there pitching, because pitching is one to one, point to point. And again, it's not investor centric and prospect specific, it's manager focused. So, that's one element. The other element, as far as what you brought up, is pipeline development. And you talk in the hedge fund space, the small managers are notoriously bad at pipeline development and pipeline management. So when they develop their pipeline, they typically do what I refer to as they chase unicorns. The mythical
Right, right.
institutional investor or the mythical family office that is going to give a boatload of money to a small manager that has 5 or 10, $20 million. And I'm saying, okay, what's in your pipeline? So the pipeline development is something that's like the blocking and tackling, and what I focus managers on. And we take them through an exercise where, like, okay, let's talk about your pipeline and see what's in it qualitatively and quantitatively, and then talk about, okay, how do we measure the strength of your pipeline? And when I say strength, the relationship strength, because at the end of the day, most people have contacts in their pipeline. They don't have relationships of trust in their pipeline. And if you don't have relationships of trust in your pipeline, you don't
Right.
raise any money. You have a lot of contacts. Like, even today, I put up on LinkedIn a little post that I said, "Oh, you're having a lot of conversations. You're having a lot of chats on LinkedIn. You're, putting up a lot of collateral and sending out a lot of posting content, but are you closing? If you're doing all those things and not closing, that means you have a pipeline that's full of contacts and no relationships. That means your marketing process is more focused on transactions than building trust. So when we talk about pipeline and who's responsible for that, that's part of the marketing process, and it's also part of the sales process from helping to build the pipeline.
Right.
Now,
Okay.
but the
Yep.
heavy lifting on the pipeline definitely comes from more from the marketing side than it comes from the sales side. But they are, again, complementary to each other. But pipeline development is key. Pipeline development, pipeline management. Because if you have you know better than me. If you have the wrong pipeline and you're not maintaining it, one of the data points again, 76.4% of hedge funds tap out their entire network within 1 year,
That
because
was on
they do
my
not
list.
have a marketing process to maintain, replenish their pipeline.
Yep. And I have a fund that I've been talking to, that I just had a conversation with just a week ago, and they said that they said, look, we've raised our first few million, and we're tapped essentially. Like we've got a few other, but we've not prospected, we've not grown our database, we haven't figured out how to do that, right? And I think that that is probably the biggest, that's the biggest thing I hear, right? Because then, you know, marketing can get you some new eyeballs, but to your point, you have to have someone to put those things in front of, right? And
Exactly.
building that database, that's building, having a CRM with the prospects, and they're ranked, right?
Yeah.
How level of relationship with them,
Right.
right? And then using that system to reach out to them and put new messages or new thought leadership pieces or whatever, not just performance, right?
No.
But
No.
pieces out in front of them, right? To
Right.
to continue to create interest.
Oh
Um,
yeah. That's that again. It's again, one of the things I say is performance brings attention. And what's that? And what is your performance? That's your IQ. That's your analytical ability to do your job, that kind of thing. But EQ, how you engage, gets the assets. So again, it's not so your performance got your attention. Now, if I've got your attention, how do I engage with you? What am I delivering to you beyond a monthly performance, comment? Are you really bringing value to me as an investor by your insight, your information, your intelligence, those kind of things? Or what are you delivering to me? You look at a firm like Bridgewater, for example, you know, and one of the things that people love about them is the level of intelligence that they push to their investors. Okay, that's a retention mechanism. The better they help people understand what they do and how they see the world, the people stay for that, just to get a hold of those daily briefings or those briefings that come out. That's a retention mechanism. So managers, and if you look at the data, and I don't want to name drop on firms that we purchase data from or use data, but there's a number of firms. There's one firm in particular. 70% of institutional investors, from a survey that they did, see thought leadership as one of the key drivers in a decision to hire a manager.
Brian, I want to touch on one last thing here before we wrap things up. Like, well, one point I want to make first is that again, the managers have to want to participate in that thought leadership process because marketing
Absolutely.
can't do that, right? Marketing is the distribution. They're the ones that keep the process saying, hey, we have to put something out on this day, or I can help you with topics, or we can narrow it down, or I can edit. But the manager has to be the one to share their expertise. Marketing can't make that up, right?
Absolutely. Because the manager's on the front line of seeing things, what they're experiencing. And
Right.
again, if they have skill and vision, they're seeing things differently than other people. So if they're seeing things differently and they have this level of skill, by default, they're delivering a level of performance that is outside of what everybody else is delivering. And people want to understand that. So, you know, I say facetiously sometimes to managers, I'm the maitre d' at the restaurant. I give people a great table and I give them the menu, but ultimately they want to talk to the chef. You know, you're the chef. The
Yep.
manager's the chef. They want you to come out of the kitchen and tell them, these are the great ingredients that I bought, the organic beets and these asparagus and this grass fed beef. They want you to come out and talk to them about how you make that meal. My job is to get them at the table, set the menu in front of them, and make sure they have a great experience. Your job is to make is the top is the critical point in that, because if they come in the restaurant and they get a great table, and excuse my French, and the food's crap, they ain't coming back. Okay? They're not coming back. So my job, again, as the marketer, set the table, make sure that everybody's taken care of, that they understand, and then bring out the chef and say, here's the superstar. Here's Wolfgang Puck or Emerald Lagasse or somebody like here's the guy that you or the or
Bryan
the or
Johnson.
somebody you want to see. Yes, exactly. So that's the marketing job, is to set the table, because unfortunately, if you don't have great marketing, you're gonna have an empty restaurant.
And that brings me to my last point here before we close this. Like, the number of managers that think they just list in databases and allocations will come, like the field of dreams, right?
Right.
Like, you have no people relationship or trust, right? And it is a
Hmm.
level of marketing even when they read that, right? But like, your thoughts on relying on databases and how they should really be properly used.
Sure. First, this field of dreams thing. It's not only if you build it, they won't come. They won't care. They won't even know you're out there. Okay. So that's part of part of that being on a platform or a database. Yeah, that may give you some visibility, but now that's when your marketing starts. You have to market through that process. Okay, you have to process every channel that you place your story, get visibility to, has to have marketing. If you're in the RIA channel, what does that look like? If you're on a database, what does the marketing process look like through there? You just putting yourself on a database or a platform is not a panacea for getting for your problem. Back way back when like Schwab had their platform, and there weren't a lot of managers or funds on the platform, all you had to do was get on there and you were going to get assets. Now, with the proliferation of product, you really got to work in that space. One of the things that people don't talk about, whether on a platform, is how many ETFs and mutual funds close on an annual basis, because they're on platforms. They just don't get traction. Why? They're not marketed well, they're not received well. So being on a platform,
Right? There's
it,
no
it,
face.
exactly, absolutely, 100% on that. So they don't. You have to understand that your marketing. I tell people, marketing is 24/7, 365 days a year. Raising assets is not. You're building relationships and engaging with people 24/7, 365 days a year. Why? Because somebody else is. I can turn on my TV and I will see an ad from Vanguard or Fidelity or some big, asset manager, and they've got the budget to be visible. Even in the higher levels, if I go to a golf tournament, I'm going to see one of those higher end wealth management organizations who's got visibility there. Now, if I'm a small manager, or even if I'm a large manager, but I'm not doing that, those people that are there, that's my target market. but they're seeing my competitor and they're not seeing me.
Right.
So again, you've got to understand the expanse of what your marketing function needs to look like, and then also understand, but don't bite off more than you can chew,
Yep.
because you can't afford to make mistakes in certain channels, because people are unforgiving. You get one, you get one chance to make a first impression. You might not get asked back if you don't make the right first impression, and that again, that's part of the marketing process.
Exactly. Bryan, I want to thank you so much for being on the show, and really, like, I think the audience can tell that you're not a third party marketer. You are a mentor and a coach, and that you take managers through a process in developing that sales and marketing strategy.
Yeah,
Um,
I like to tell managers, not only I may be a coach, but I'm more importantly a catalyst.
mhm.
Okay, so I'm a catalyst to get them that spark, to get them to where they want to be. And a lot of times just focus them. But I appreciate the generosity that you guys have given to me to be on the show. And I hope it's a successful endeavor that you go into. But I'm always appreciative and welcome the opportunity to add value and contribute to this ecosystem. This business has been so great to me. It
Great.
has given me a life that I could not imagine. And I've been fortunate, and that life is all about people. I was fortunate enough to meet somebody like you over the years. And no, seriously, that's the distinguishing
Right.
part about this whole business. The interesting, smart, intelligent people that I learn from, that I get better from, and they help me get better to do more for other people and add value. So I appreciate the generosity and the opportunity to work with somebody like you, Shane. So thank you very much for that.
Not at all, Bryan. Again, you bring that energy, right? You bring that. You really are the catalyst, and you can tell by. I think everyone can tell by the energy that you bring. But you're also bringing the smarts, the insights, and everything from being literally on all facets, around all facets of this business. So thanks
Thanks,
again.
Shane. I appreciate that. Great.